What's up everybody, Tom here with another video. Today we'll be talking about the latest stock market news along with our technical analysis thoughts on the S&P 500, NASDAQ, silver, volatility index and US dollar. The stock market is starting to move bullish in direction during the American debate, but are we going to see a historic bull trap ahead of the American election itself? Let's now take a look together. Stay tuned. So before we get into this video, I just wanted to thank each and every one of you, the 20,000 plus subscribers out there. We're going to be drawing the $540 live trading prize in this video itself. And all you have to do is be a subscriber and comment down below with the hashtag winner in the comments somewhere. We'll draw the prize over the next 24 hours and then of course, message the lucky winner. We've had to change it to this due to YouTube's policies on being able to pull subscriber lists and our inability to being able to do that due to YouTube's changes. So if you comment down below, you're in with even bigger chance of winning that $540 prize. Good luck to each and every one of you. So what happened over the last 24 hours? Well, we saw a slight decline in terms of the markets coming into the debate. The market has since put that back on and it's actually acted incredibly technically, and it came off just the perfect level that we talked about in yesterday's live market opening bell session. We've also seen a little bit of pickup in Google and Facebook, and we're talking about how these historically lag usually Microsoft, Apple, and Amazon's initial bull move and slowly follow after that point, and something that's been a reoccurring phenomenon throughout this crisis. Generally though, most of the market was down between 1% to 2%, and overall, it was pretty much in line with the expectations going into the day. So what happens ahead of the election? Well, a few things are that the Democrats' new $2.2 trillion bill, including a second round of $1,200 stimulus checks, is now on the table. I'd be very surprised if there was not some kind of bill passed before the election, and it may not look like this one, but I think both sides will be forced to make some decisions before the election themselves. I'd be interested to hear everybody's opinion on this, but my thoughts are they'll need to pass some kind of bill before, of course, the election itself. We've also seen a pretty strong recovery from home prices. Now, obviously, overall, this is due to a low lack of supply and, of course, demand just being there, but we're seeing some economic recoveries in certain sections in America. In terms of things like the fear and greed and put call indexes, overall, they've been relatively stable. We've seen a slight increase in puts coming into, of course, this particular day being the debate, and into this week with, of course, non-farm payrolls being this Friday. We'll be doing a live stream of that, and it's always a massive amount of fun. So make sure you subscribe and come check us out during that event. Put call ratios overall from CBOE went up to 1.6, and this is coming off a 1.51 base. So we have seen an increase in puts opened over the last 24 hours. So what has this debate done to volatility in the market and just into the election? Well, the debate's really done not that much in terms of volatility. We're sitting at around 26 here on the VIX, and this is the 1 hour chart. And we can see that 26 and 25 are both support zones, specifically the 25 for VIX. If we put a horizontal line across this level, you'll notice how many times on this 1 hour it's come back, found support around this zone, and then bought up, or VIX has spiked and increased. Obviously, if the VIX gets underneath this zone, we probably see a gradual decline in volatility, and we don't necessarily expect that ahead of the election. We probably expect the VIX to still remain well above 20 and hopefully above 25 to allow traders and, of course, investors the opportunity of some kind of volatility over the next month. The debates, economic news, and the stimulus bill overall will all be hot topics coming into this election. What are some of the other key indicators telling us? Well, Dr. Copper, obviously a big thing that we watch out of recession periods, is still showing strength overall. This 2.95 held yesterday, and this was a key point because we were seeing during the live opening Tuesday bell that copper was actually shorting and it was selling off into this 50 exponential moving average. We noticed that, of course, the 50 exponential moving average was a key point of support multiple times, plus previous resistance acting as support at 2.95. So if it didn't hold this level, I would not have been surprised at all that a close below this 50 exponential would have pushed copper and pushed sentiment down to 2.8. Remember, if copper's moving in a direction and the stock market is not moving in that direction, it's a key indicator and lead for the rest of the market sentiment. So if copper now breaks through this 20, I'd probably expect further bullish momentum in copper up to 3.1 and the S&P 500 to move bullishly as well towards the next point of major resistance, where I think the bears and the bulls will have the final fight out to see who's of course going to win in this particular market condition ahead of the election. Another lead indicator is of course also the US dollar or the dollar index itself. And we can see that's come back into the exact zone where it should now be finding some form of support. The previous resistances over here, being the 93.80, are now potentially going to act as support. Now there's two levels here. There's the previous 93.80 resistances over here back in August, and then there's the most recent resistances which are underneath at around this 93.60 zone. So what I'd be doing is probably drawing up a box for this area and really saying, okay, we've got a zone or a range that we expect the market to be pulled back up in. And we also need to be aware that the market has aggressively sold off. So we never want to catch a falling knife in these situations. If you're a bit of a dollar bull or a dollar bear or any of those type of things and you're looking for trades, what you want to do is you want to make sure that the market actually moves with you in terms of momentum. So when it sells off this fast, don't catch the falling knife usually in any circumstance. And what you want to do is wait for what we call the lightning bolt, which looks something like this. So there's a trough, there's a peak, there's a higher trough, and then a higher peak. And when that higher peak comes in, it shows momentum, money flow, and bullish sentiment coming back into the market. At this point, it's all bearish in terms of these 4-hour candles, with each candle showing more and more bearish intent. But we do expect somewhere in this area for bulls to get back into control with the US dollar. And of course, if the bulls get in control and push the US dollar up, that could be bearish for the S&P 500 overall. So this is of course good news for people buying metals and people buying just particularly anything versus the US dollar overall. We've seen an increase across the board. Silver probably one of the notables because it came off this trend line, and we had the hammer candle followed by momentum follow through with a new high reached here. That really triggered a whole bunch of buy orders, and we saw a bunch of strength coming off that point. We talked about this last week on the channel, that when this level was breached, we would pretty much see bullish intent up to the 24 to 25 zone. And we've got two exponential moving averages here on the daily that are going to be touching each other, and they'll be a very hard point for the bulls to get through. So if we do see continued dollar weakness, we might even see silver get upwards here of the 25 plus area and then find some form of resistance. So over to the broader markets, I want to talk about the US 500 and the NASDAQ themselves. So whenever we're looking at both side by side, and these are both the 1-hour charts, I think you'll notice a few things that end up happening, and that is that the S&P 500 leads the way with best technical analysis and the best technical confirmations. So they look very similar on paper. We had a pullback in the NASDAQ yesterday, and we had a pullback in the S&P 500 as well. But notice this horizontal line on the S&P 500. We have the blue line here being the 50 exponential moving average. We have the previous resistance being the 33.30. And of course, we have also the 33.30 overall acting as previous supports in the market as well. So this is a very key zone and a very easy area to see a Fibonacci pullback, a 50 exponential, and a previous resistance. It always provides scalpers and intraday traders great opportunities to enter a great position. And that's what it did do. And of course, it went back on to reach around the highs and then found some resistance, which is pretty normal as well. Now, if this level is breached, this 33.30 is breached, it really brings in further selling pressure, because at that point, what happens is we don't have any of these previous supports or resistances in the market, and the market could potentially flow all the way back down to the 32.20 zone. That's what's historically done. It's basically broken through this area and then just sold off very aggressively back until it hits that 32.30, 33.30 zone. What I guess I'm getting at though is that the S&P 500 at the end of the day leads the market with the better confirmation signals. If you then want to take that signal and buy the Dow or buy the NASDAQ, you're usually going to have quite a lot of success because the S&P 500 has told you what to do there. Conversely, Apple also has some pretty good technicals on it right now. 112, very similar to what we saw there on the US 500. We have multiple levels of horizontal support through the 112. We've got previous resistance, and we've got 3 exponential moving averages on the 4-hour, all at the same point, acting as dynamic support. So if the market sold off tomorrow, hit the 50 exponential, the 20 and the 200, it provides a great technical opportunity. And we've seen that technicals have been acting very good in the market recently with great buy zone levels and of course great sell zone levels, which is excellent because it has not necessarily been this way since the Fed put the put in the market over the last couple of months. So the 112 area is obviously one of those points where you need to make your own decisions, but certainly very interesting to see so many synergies happening on the technicals there. When we go over to the broader market being the SPX or the real market itself, and we look at what could happen in the future, this is why I'm talking about a potential bull trap. So right now we are in, no doubt, a nice little double bottom bullish sentiment. And that bullish sentiment pretty much ends around the 3400 to 3420 zone. And the 3420 zone becomes really the big fight area between the bulls and the bears in the future. It's one of those key critical zones where if we break and close above this area, what that does, it triggers not only probably straight back into the highs, but actually even all-time highs and new highs. Why is this? Because this is where the key market structure is in the market. And I think this is the key sentiment changer for the markets overall. So the 3420 is such a key critical zone. And if the market does breach that area and close above, it really does signal the further bullish momentum. We also would expect a whole bunch of selling to occur at this point. So it may hit this area, sell off, and then find further bearish pressure all the way back down to maybe even the 3200 or lower. Why is this? Because this could be that bull trap area for a lot of market participants. It makes sense that this is the zone. And if it does reach here before the election, there still is many concerns in the market, and all of those could add negatively into the election months. Historically, October and November are slightly negative in election years. Most of the other months aren't, but October and November are slightly negative. Not enough to really care about, but it's interesting. Slightly negative into very many unknowns in the market, and we have a recipe for potential fireworks. So things that you always want to put on your charts. You always want to have 3420 on your charts. Check that zone out in the future. We often also want to have alerts on the 3200 zone plus, because a break below that point opens up 3100 and 3000, which we've talked about before. So really overall, the S&P 500 is still the king of the charts in terms of showing us sentiment in the markets. When we go over to the US 100, a very similar kind of thing with the key resistance zone. This one here is a little bit lower, so it's around that 11,572. I'd probably set it as 11,600 for me. And if it breaks past 11,600, that'd be relatively bullish. The NASDAQ overall, though, has shown us a bunch of fake out signals in the past. When it broke below this area over here of 11,000, we would have hoped that it goes to 10,400. We mentioned that a whole bunch of times. The S&P ended up hitting the key zone, but the NASDAQ did not. So again, the S&P will drive us to the correct areas and hopefully give us the sentiment, and then we can always look at the S&P as the driver for the NASDAQ. So the NASDAQ's pulling back now after the debate has finished, and it looks like it could go and put pressure back on the 11.2. And we would usually expect this point to be some form of support for the markets. But remember, look at that S&P as the main driver. So if you've enjoyed this video, please make sure to, of course, subscribe and hit that alert button. And just a quick reminder, make sure you subscribe as well and put in the comment section down below #winner. And in the next 24 hours, hopefully you're the lucky one that's winning $540 towards their trading or investing account. We'll see you tomorrow, everybody. Good luck in the markets today. Bye for now.